we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, this is the 1 hour price chart. Each candle on this time frame represents a 1 hour trading period. And overall, what we're starting to see is a bit of consolidation right around that $6.20 support zone that we have been watching for this stock. So if we sort of drill in here a bit, what we can see is that we have definitely broken through this area, but we haven't really seen a closing period below there, strangely, because if you actually take a close look at these hourly candles here, what we can see is that these share price breaks lower have actually been on the receiving end of buying activity. So, you might be able to make the argument that we did have one closing period below that 38.2% Fibonacci retracement zone right here, roughly. But, these levels are so close that I wouldn't necessarily feel the need to call this a price break to the downside. So, we are starting to see a little bit of a bounce here, as you can see, but overall, this is a fairly weak looking bounce. And it does look like the this price gap that was here previously isn't really attracting much buying activity at the moment. So that would be very interesting if we did not see share prices fill this price gap. That would be a very interesting development because this is not so far back in the past here. We're talking about the October 8 trading session. So this would be 2 days ago, Tuesday. So, it's not as if most of these orders have been filled or anything like that. And if the market is not able to enter back into that area, I would consider that to be a fairly bearish signal, because that's the type of activity that should attract market prices, especially when it's over such a short-term period of time. So that would be a bit of a warning signal if we didn't see this price gap filled. Overall, I do think that this bounce here is starting to look a bit weak, and this really doesn't look like the 620 area is going to be holding as support here, at least not near term. Now, I understand that a lot of people are focused on this stock from more of a longer term perspective, and that's perfectly fine. But one of the issues that I'm having with this stock is that there just seems to be nothing but positive, remarks that get made here. And that's not the way that the market moves. So we're starting to see share prices sort of head lower here. We did see a tremendous run higher. We did call this bottom at $3.60, and that we really did start to, look for ways to exit the trade as we were moving into the higher $7 area. So, as things stand here, this does look like the share price is going to need to take a bit of a breather here. And start to move with a bit of a deeper pullback to the downside. Now, that does not necessarily mean that this creates a bearish outlook for the stock. There have been some very significant price movements here. We can't just simply sort of pull out on the price chart a bit here to the 4-hour time frame and see that there has been a lot of damage that has been done to the bearish thesis here. The bearish side of the argument here has been trading under a significant amount of selling pressure. And this Fibonacci zone that I was watching here, pointing out at 735, has now really been broken. I would have liked to have seen a bit of a better break to the top side, because what actually happened here, as you can see, was a share price gap activity, and then share prices just completely moved lower from there. But I would still consider this to be a break in that area. It's not a very good break, because you would want to see some more upside price movement and possibly some follow through past $7.35. And when I say follow through, I mean more than 770. You would have wanted to have seen a bit more of a gradual price movement to the top side here, rather than just a price gap and then a very obvious drastic retracement in the downside direction here. So this is not ideal. But I would still make the argument that this has been a share price break above that 61.8% Fibonacci zone. And then, more importantly, in my view, the real issue is the fact that we broke above this $6 mark. So, we did manage to hold support at $3.60. And then we did see share prices break above that $6 level. So, I understand that a lot of people are probably think that I'm viewing this stock in a negative way or whatever, but you have to remember, I'm the channel that was calling this $3.60 bottom here, watching that descending triangle pattern. I don't know if anybody remembers watching these videos. I mean, we were watching this descending triangle pattern for a very long period of time, and then we can see how that actually resolved itself. We did hold support at that $3.60 mark, and then we did see share prices move higher. So anybody that's, thinks that I'm just totally bearish on the stock or something like that, is either forgetting the prior videos or didn't see the prior videos. Because we were calling the bottom here. We were looking at this descending triangle break for quite a while. I mean, that went on for, I think, over a month. So, we were watching that for quite some time and expecting to see a fairly significant move to the top side. And then I do still think that the inflection point here has occurred at $6. That was a very major price break higher. If we just sort of look at the history here, we did see, share prices move roughly into that area, find a bit of resistance, start to move lower, but then we found support right around 520, and then share prices did start to then explode again higher. So, we just have to keep an understanding here that nothing moves in one direction forever. And when things move too quickly in one direction, that's not actually a great sign. I mean, what you want to see, especially if you're a longer term holder of this stock, what you want to see is more of a gradual, establishment of support zones, pullbacks, retracements, and then forming a higher base and things like that. I mean, that's what you really want to see. You don't want to just see, share prices just explode into the upward direction like this. It's not a very mature way of looking at the stock market. What you really want to see is a more orderly progression of highs and lows. Upward price movements and then pullbacks, and then a bit of a higher high and then a bit of a higher low. Something more along these lines would be preferable. Especially for people that are long at the higher levels, because the only way that you're going to get back to, say, I don't know, $20 per share or something like that would be to see share price movements that are like this. It's not just going to be an explosion. I mean, these are not lottery tickets. I understand there's a channel called Lottery Stocks. That is the wrong way to be looking at this. So there are some downside price movements, but we're starting to move right back into the $6 area here. This is not a reason to be concerned. These are good things, but what you want to see is the establishment of a support zone at higher levels. So, I wouldn't really start to be concerned unless we lost support coming in right around $5.20 or something like that. I mean, then I think we could start to see some deeper retracements. But at the moment, what you actually want to see here is a bit of a healthy pullback, and then for share prices to establish themselves with a higher base, possibly something around 570. So this is the type of price level that we'll be watching here going forward. Here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.